Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about Euro JPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting a quite strong level of previous monthly resistance, which is now turned support. In fact, from here, this previous rejection to the downside was created, so this level was acting as resistance with the creation of this red candle. After that, the market broke above the zone, and what we know is that previous resistance, once it gets broken to the upside, becomes support. And in fact, the market has respected this level as support here, started rejecting it to the upside, and in a situation like this, we could expect more potential bullish continuation to be created away from this level. So on the monthly, everything looks quite bullish. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, what we can notice is that this area was acting as quite significant previous weekly resistance preceding all these rejections to the downside. The market then broke above the zone, and we can see how multiple times the market has tested this area, and every single time it got rejected to the upside. And we can also see a huge rejection which just happened last week. We had the creation of this very big candle, precisely with a very big wick. And when you see a candle like this, essentially it means that even though the market was going down and testing all the liquidity that we had at this area, the market found massive support and demand at these levels, creating a huge rejection to the upside. And in a situation like this, combined with the fact that we already know that on the weekly we are still above support and also rejecting monthly support, this brings the conclusion that we have a higher probability of this market continuing higher rather than creating a continuation lower. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, what we can notice is that if we look at the pattern, we have a very strong impulse. After an impulse, we could expect a correction. Now, if we are to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.32 Fibonacci retracement currently lining up exactly at this area, which was also previous support here on the daily, which is now again acting as support after the market broke it to the upside. Now, the fact that at this 0.382 we have both Fibonacci level and the previous support, which is now still support, makes this level a confluence of support zone, and inside of a confluence of support there is good probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, why do I speak about institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the JPY, what we can see is that with the last reports, we have seen a massive amount of decrease of net positioning. In fact, in the long run, we went from minus 53K all the way down to minus 113K net positions. So a huge decrease of the net positioning, showing how institutions have been moving to the bearish side of the JPY. And if institutions short the JPY, this makes Euro JPY stronger because essentially the weakening of the JPY could fuel this continuation higher. So if we will have a correction to a confluence of support inside of here, we have more probabilities of seeing institutional longing that at that point would increase the probabilities of a rejection to the upside. So if the market will go and retrace to this area, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find also linked in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here past the testimonials, you can see that directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkup process. So I really suggest to go and check it out as soon as possible at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.